made applicable from July 1, 2020. Some provisions have been deferred due to pandemic. And as this is very important, Institute has made all POUs to mandatorily have a 2-hour study circle on Code of Ethics. Mr. Guha will deliberate on the important matters in the code. Now I would request our convener, CA Indu Chatra, to say a few words. Induda.
Good evening, friends.
Good evening.
In every walk of life, there is ethics. And even in a professional world and in fraternity of chartered accountants, we do have ethics. There is a code of ethics which one has to follow. Being a professional chartered accountant in practice, I would especially say in practice, because those who in industry do not even know what code of ethics is there as far as the profession is concerned. Before I proceed any further, I would like to request our president to say a few words, and then he'll get back to me, and then we'll proceed further. C. Manish Tiwari.
Good evening, Sumantra. Good evening, everyone.
Good evening, Manish.
And this was long overdue, holding the seminar on ethics, because there is deep relationship between ethics and professionals, and for that matter, for corporates also, to achieve desired results, to go up to a particular place. And we are very eager to listen Sumantra, who can guide us about at which all levels ethics are to be practiced, and what are the advantages of the ethics, practicing ethics. So without wasting any more time, I will request Aninda to introduce Sumantra, although he does not need any introduction, but protocol has to be followed.
Okay. Thank you, Manish.
Thank you.
Just like Manish said, Sumantra needs no introduction, but still protocol is protocol. Sumantra Guha is a partner of MSS Guha and Associates Chartered Accountants. He was the chairman of the EIRC of ICI in the year 2005-06, and he was in the Central Council from the years 2010 to 2013, and again from 2013 to 2016. During these years in the Central Council, he had chaired a lot of committees and was vice chairman of a lot of committees also. I won't go into those details because that will take half an hour time. And he's a member of the executive committee of ICI and disciplinary committee. He was a member. He was a member of the examination committee and others. And he's a co-opted member of the professional development committee in 2017-18 and editorial board of in 2018-19. At the moment, he is executive committee member of Bharatiya Salahkar Samiti. He is a general secretary of Calcutta Boys School Old Boys Association. He is a member of the Regional Direct Taxes Advisory Board, Calcutta. He is an ICI nominee for the Council of ICI in the Quality Review Board in the year 2011 to 2014. And he was he's a member of the Finance Committee of Calcutta Club and ICI Accounting Research Foundation from 2013 to 2016. Member of the Committee of Management of Accountants Library. As I told you all earlier, he is a past president of the library. He is president of Salt Lake Chartered Accountants Association and co-opted member of Public Relations Committee of ICI in 2021-22. He is an executive committee member of ACAE and member and board of governors of Institute of Internal Auditors, executive committee member of DTPA, executive committee member of BBD Bar Professional Study Circle Association. He is a regular speaker at various forums of Institute of Chartered Accountants of India. He is the president of Lions Club of Calcutta Vikas for the year 2021, member of Calcutta Club since 2006, and member of St. Xavier's College Alumni Association. Now, with these few words, I would request Mr. Sumantra Guha to please give his deliberation. And I would also request that if you have any questions, you please put it in the chat box. Mr. Guha will take them after his deliberation. So thank you very much. Sumantra,
Yes.
please start.
Yes. Thank you, Onin. Thank you, President of the Library, Manish Tiwari, Convener, CA Indu Chatrat, for giving me this opportunity to discuss on a topic which is very favorite to me, that is Code of Ethics. And as you know, the Institute has mandated that every POU, that is Program Organizing Unit, has to undergo 2 hours of discussion on Code of Ethics and 2 hours on standards of auditing. So this is a compulsory topic which has to be covered by respective POUs. I have a PPT. I think I need the screen sharing, Smita. I think kindly enable me screen sharing. I'll start that. Okay. Sure. This full is ये नहीं आएगा ना ना मगर दाग किटे जाए करो 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 हाँ ये मैक्सिमाइज करो दाঁড়াও এটা কে ওড়াবো কি করে আমার লেখাটা আসে না পুরোটা একটু দাঁড়াও ঠিক আছে আচ্ছা can everyone of you see the screen?
Yes, yes.
আচ্ছা বাস ঠিক আছে okay. So my topic today, as Onin said, is Code of Ethics and the significant changes, because as you all know that the Code of Ethics has been revised and a new Code of Ethics has come, which is the 12th edition from the 1st of July 2020, and it has been broken up into 3 volumes, volume 1, volume 2 and volume 3. Volume 1 deals with global provisions, because as you all know that since India is a member of IFAC means International Federation of Accountants, it has got certain international commitments as far as IFAC is concerned, and hence it is mandatory on the institute to follow the IFAC provisions and incorporate it in our own provisions in order to align it with the IFAC Code of Ethics. And IFAC's standard setting body, ethical standard setting body, is IESBA, that is International Ethics Standards Board for Accountants. And this Code of Ethics 2020, which was actually formulated in 2019, is aligned with the 2018 International Ethics Standards Board of Accountants. Now, prior to Code of Ethics, we had the Code of Conduct, which was published in 1963 by the Institute. That was in 1963. And when we qualified, most of us qualified, then we had the Code of Conduct, but in the year 2001, it was renamed as Code of Ethics from Code of Conduct. And then we have had a number of editions. The 11th edition was published in the year 2009. Now, when the 11th edition was published in the year 2009, after that, a lot of changes took place. In the Companies Act front. Various economic and commercial laws were also introduced. The CA Amendment Act 2011 came into force, and so on and so forth. So due to a large Insolvency and Bankruptcy Board of India was formed, we had insolvency laws, we had new valuation laws. So in order to incorporate all these changes into one document, the Institute felt that it is imperative that the Code of Ethics requires to be revised after 2009, And it was in 2019 when all the changes that had taken place in the last 10 years got incorporated, and in 2019 we had the final set of volume 1, volume 2 and volume 3 of the code of ethics, which was made effective from the 1st of July 2020. Though a few provisions have been deferred with, but I will still deal with those provisions because they have been deferred for a small period of time till 1st of April 2022. But for viewers, I would just like to say that you need to remember two things. Volume 1 deals with global provisions, which are in line with IFAC. Volume 2 deals with domestic provisions, and volume 3 deals with only case laws. All the case laws have been compiled and put under one document under volume 3. And as I said, all these 3 volumes are effective from the 1st of July 2020, and they are also available in the website of the Institute of Chartered Accountants of India under the Ethical Standards Board Committee. Before I go to the other provisions and the deferment, some important things I would like to mention, some important recent changes that have taken place, which I would like to mention, which I think one should know before we proceed with the other provisions, like future options and derivatives. Previously, 1 minute. Am I audible clearly?
Yes, yes.
Yes, you're audible. Yes. Okay. See, some recent changes have taken place, like the council at its 400th meeting on the 18th of March 2021. What they did was they allowed chartered accountants in practice to deal with future options and derivatives, but for themselves only, not for their clients. They were not permitted to deal with future options and derivatives for their clients, but for themselves. Prior to that, there was one Schedule 1, Part 1, Clause 11, which said that a chartered accountant in practice cannot engage in any other business or occupation. And dealing in shares or derivatives, future options were not permitted. But the council permitted that activity for themselves only, for the chartered accountants themselves. Number one. Number two is, another important change has come, which many people discuss, is that quarterly review. Many times we have to do quarterly review. When we do concurrent audit of banks insist that we also do a quarterly review, because at that time the statutory auditors are not present. The statutory auditors come in the month of April and go away in the month of April. But for the months of June, September and December, a quarterly review is required to be done, and it is normally done. The banks insist on the external audit, the concurrent auditors to conduct the quarterly review. But technically speaking, quarterly review was an external function, and a concurrent auditor was not supposed to do quarterly review. The institute understood the problems, the practical problems faced by the concurrent auditors, and very recently has come out with a circular which is there in the institute's website, in the Ethical Standards Board announcement, which says that quarterly review can be done by a concurrent auditor, provided that it satisfies certain RBI circulars and guidelines, and you are not reporting to the central statutory auditor, you are reporting only to the management. So this is a very important change which one should know. Third is sharing of fees with non-member. This is also very important. At times what has happened, various auditees, various clients, mainly government clients actually, while they have brought out tenders for appointments, any cost towards the tender has been recovered from the audit firm which has been allotted the audit. It has happened in a few places only, not everywhere. I haven't seen such a thing happen in West Bengal, but in some other regions such things took place. So the CAs said that whether it is proper on their part to refund to the government the fees, the administrative expenses that the government has incurred to bring out that tender, so on and so forth. The institute has come out with a clarification saying that there is no problem and one can refund the fees. Refund the fees means refund the administrative costs that the concerned auditee may have incurred for the purpose of bringing out that tender. This is also very important. The fourth important thing is networking guidelines have been revised. It was there since 2005, but today is not the day to discuss networking guidelines. Just to brief the members about what has happened is two new concepts have come out as far as networking is concerned: the alliance firm concept and the lead firm concept. These two concepts have come out. It has been finalized by the Council on the 9th of February 2021. So the existing networking guidelines have been revised, and along with that, we have an alliance network concept and a lead firm concept. Those things have also come from the 9th of February 2021. And then the multidisciplinary partnerships, that has been made effective from the 8th of July 2021. Our Form 18 has been revised, where we can have partners who can be cost accountants, who can be company secretaries, who can be actuaries, who can be advocates, who can be engineers, and who can be architects. These 6 professions have been allowed: company secretaries, cost accountants, advocates, actuaries, engineers, and architects. But the regulator of those professionals who want to become partner in CA firms must also get permission from their regulator. Like our regulator is the Institute of Chartered Accountants of India. The Institute of Chartered Accountants of India has permitted chartered accountant firms to be partners, to have partners who are in these 6 disciplines. But it will take some more time for other regulatory bodies also to allow their members to become partners of CA firms. And this is mentioned in Regulation 53B of the CA Regulations 1988, which came into public domain from the 1st of July 2013. And of course, many other professionals can also be included later on, but then the council has to revisit those regulations and bring in more and more professionals also who can partner with CA firms. But this is a significant change that has taken place, although since the Company Secretary Institute and the Cost Institute are under the Ministry of Finance, the Company Secretary has already issued such guidelines. The Cost Institute, I'm not aware whether they have issued the guidelines, but they will fall in line because the 3 institutes are run by the Ministry of Finance. But as far as the other professionals are concerned, we have to wait and watch what happens. So these are I thought these are the 5 important recent changes that have taken place. And another important change that has taken place, I would like to mention, otherwise I will forget at the end, that is credit rating agencies. Say, for instance, you have signed the balance sheet of a company, and credit rating agencies at times call you up or over mail wants to know from you whether you have to opine anything other than what you have opined in the financial statements of those entities which you have audited. And they request you to share your feedback, so on and so forth. The institute has made it absolutely clear that there is no way by which a chartered accountant in practice who is the auditor of a company should share such sensitive information with the credit rating agencies. And it is a strict no-no, and it will be violating the provisions of client confidentiality. So now I'll proceed with the presentation that I have. As I said, 3 important issues have been deferred, which are there in volume 1. First, we'll be discussing volume 1, that is the global provisions. Now, the 3 important provisions are responding to non-compliance of laws and regulations, that is the auditor's duty is to respond to issues where he finds that there has been a non-compliance of laws and regulations, other laws and regulations, apart from the accounting and auditing standards, apart from any laws which have a direct impact on the financial statements of accounts. If there are other laws and regulations, which have been not complied with, then the auditor has to report that the law came into force on the 1st of July 2020, but due to the pandemic that has been deferred till 1st of April 2022. Second is fees relative size. I will come to the detailed slides later on. And taxation services to audit clients, that is also very important. So I will come to the subsequent slides to explain these provisions. As I said, this is the 12th Code of Ethics, 12th edition. Now, volume 1. Now, these slides have been prepared by the Ethical Standards Board, and they normally deal with the changes that have taken place between the 2009 code and what has come in the revised code in 2019. Now, in the 2009 code, for volume 1, 5 important changes have taken place. As I said, responding to non-compliance of other laws and regulations, restriction on taxation services to audit clients, safeguards, I'm reading the 4th one, safeguards on fees from single client if it is consecutively for 2 years. I'll come to it later on. Then a 4th provision has also been added, that is prohibition on management responsibilities of the audit clients. That has not been deferred. This prohibition on management responsibilities of the audit clients is still there and is effective from 1st of July 2020. And the 5th provision is duty of accountant in case of breach of independent standards. I'll come to this first, breach of independent standards. What are the breaches that can take place in independent standards? Now, there are 5 threats that an accountant in practice normally faces. 5 threats. They are self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. These are the 5 threats that an accountant normally faces. Now, self-interest threat means, suppose you have quoted very low fees, then there is a self-interest, or you have a relationship with the client, that is known as self-interest threat. Self-review threat is where you are the maker as well as the checker. Suppose you are the maker as well as the checker, then it gives rise to self-review threat. Means you are trying to review your own work, which you are not permitted to do. A third party should review your own work. Third is advocacy threat. That means you are acting as an advocate or a representative of the client before taxation authorities or other government authorities or anywhere. So there lies a threat which is called advocacy threat. But I'm coming to the solutions also later on. There is something called familiarity threat. That means, suppose the spouse of the auditor, your spouse is the CFO of the client, or some of your senior professional colleagues, or some of your seniors who were partners in your firm earlier. Then they later on leave the firm and then join the client, and they are holding responsible positions in finance. They are holding responsible positions in that company. That gives rise to familiarity threat because you are familiar to them. So, and they can try to act in such a manner which may lead to breach of independent standards. And the last is intimidation threat, where the client is directly intimidating you. That means the client is threatening you to sign on what he wants to sign. So this is the worst possible type of threat. So the position is, first you have to identify the threat. You need to identify the threat first, and then try to mitigate it, try to reduce it to the maximum possible extent. But if you are unable to either identify or mitigate the threat, then the best possible option that is left to you is to leave the assignment. So that is the last option, of course. But these are the ways in which the independent standards should not be breached. Now I'm coming to the other four, which have been, the three have been deferred, as I said. Management responsibilities have not been deferred. I'm coming to it one by one. Just only remember one thing, that this Code of Ethics 2019, which has been published, is if non-adherence or non-compliance of the provisions of the Code of Ethics is a violation of Clause 1 of Part 2 of the second schedule of the CA Act 1949. It is a violation of Clause 1 of Part 2 of the second schedule of the CA Act 1949. And the schedule says that any member of the institute, whether in practice or not, shall be guilty of professional misconduct if he contravenes any of the provisions of this act or the regulations made thereunder, or any guidelines issued by the council. So if he contravenes any of those provisions, then he will be held responsible under Clause 1, Part 2 of the second schedule. Now, I'll go only through the important slides so that the discussion is meaningful and is compact. Now, responding to non-compliance with laws and regulations, as I said, it refers to any act of omission or commission committed by a client or employer contrary to prevailing laws or regulations. Like you find that the client has not followed provisions of the Money Laundering Act 2002, or it has not followed the Benami Act 2016, or it has not followed the RERA Act of 2016, or the HIRA Act in West Bengal, or it has not followed provisions of FEMA, say for instance. It has not followed provisions of the Insolvency and Bankruptcy Code. It has not followed the labor codes that have come into force. It has not followed any other relevant financial and commercial laws which have a direct or indirect impact on the financial statements. That if you find such instances, then you should report it to the, you should include it in the auditor's report. Now here it says, as it says that the applicability of NOCLAR has been deferred till 1/4/2022, but the silver lining is it is only applicable to listed entities, not to private limited companies or to non-corporates. Applicable only to audit assignments. Later on, subsequently, it may be extended to non-audit services, maybe, but at the moment, or till 1st of April 2022, it is only applicable for audit assignments. And in case of PAs in service, it is applicable to employees of listed entities also. In other words, for all professional accountants who are in service in listed entities, it is applicable to them also. The reason is that the listed entities, the employees of the listed entity, it is their responsibility to prepare the accounts for the auditor, and the auditor's job is to audit the accounts. So they cannot shred their responsibility, and they cannot say that we are not responsible for the preparation of accounts. You are also a chartered accountant. You are not in practice, but the Code of Ethics is also applicable to you because you are a member of the institute. And if you are an employee of a listed entity, then it is also applicable to you since you are in service, because you are given the responsibility of preparation of the financial statements of accounts which the auditor will audit. So it is also applicable to professional accountants in service in listed entities. And examples of laws and regulations, as I said earlier, it says fraud, corruption and bribery, money laundering, terrorist financing, proceeds of crime, SEBI violations if there are any. But the list can be endless. It can be, there could be many other laws, which the violation of which you are required to report for the violation of such irregularities or not adhering to such compliances by the auditee. So these are only few examples. I think I have given you more examples while discussing, like RERA, like Benami Act, like Banning of Unregulated Deposit Schemes Act 2019, like Labor Code, so on and so forth. But what are not inconsequential, which are inconsequential, you are not supposed to report. Like, say, for instance, an Epidemic Diseases Act 1897, there was an act which people had forgotten. Only after the pandemic, people started remembering that there was an Epidemic Diseases Act 1897. Now, if there is any violation, then as an auditor, it is not possible for you to understand that, because you are not an expert in those laws. You are only an expert in accounting standards, auditing standards, financial and economic laws, commercial laws. So, which are clearly inconsequential, you are not supposed to report, and no one is going to hold you responsible for that also. Similarly, if there is any personal misconduct unrelated to the business activities of the client or employer, then it is not required to be reported. Now, coming to the next important provision in volume 1. I will not go through this partner rotation. Of course, I'll just mention 1 minute. I'll just spend 1 minute. There are 3 types of partners actually. They are called key audit partners. All are key audit partners. There could be one engagement partner who is doing the audit. There is one EQCR, means engagement quality control review partner. One is a review partner, and the others are auditors in their own team. They are also key audit partners. Now, the 2009 code said that they can be working for 7 years at a stretch, and then there has to be a 2-year cooling. That is what the 2009 code said. But the 2019 code is more stricter. They said that they can work for 7 years at a stretch with a client, but an engagement partner must undergo a 5-year cooling, and a review partner must undergo 3-year cooling, and other key audit partners, those who are in the team, must undergo a 2-year cooling, rather than a 2-year cooling for all 3 of them in the 2009 code. As you all know, 2013 Companies Act, it talks only about firm rotation. It never talks about partner rotation. But there could be instances where partners could be rotated if it is mandated as such by CPE or by RBI. So look at the last line, which says, similarly, partner rotation requirements prescribed by certain regulators such as RBI, NBFCs, etc., shall prevail. So if they say that partners need to be rotated, they need to be rotated. And what are the restrictions on activities during cooling off? They should not hobnob with the engagement partner, or they should not hobnob with the audit client. They should not hobnob with the review partner or the key audit partner. They should remain separate, and they should not, they may be engaged for the audit of any other company, but not that company, and they should not be taking any policy decisions as far as audit is concerned for that company. Now, this is very important. Management responsibilities. Now, this has not been defined. Now, why this is very important? What happens is, normally we take up the responsibility of the management as if we are running the business. We must make it very, very clear to our members that we don't run the business. It is the client which runs the business. But the manner in which we are married to our clients, I repeat, the manner in which we are married to our clients, there is a perception that as if the client will always say, I don't know anything, my chartered accountant knows. He will be able to guide you in every matter or in every sphere. So this is a very 1 minute. This is a very unfair sort of a practice. This is a very bad practice, and we must always understand that we should not be taking management responsibilities. We are not running the business on behalf of the client. We can only provide services to the client which are administrative services, like word processing services, preparing administrative or statutory forms for client approval, submitting such forms as instructed by the client, or monitoring statutory filing dates and advising on audit clients for those days, for those dates, so on and so forth. So we can only provide services. We do not step into the shoes of the client and start doing business as if you are the client. And of course, this is not very important. So this management responsibilities is very important. One must remember, and this has not been deferred. This is effective from 1st of July 2020. Now, the third most important thing, which has been deferred till 1st of April 2022, is taxation services to audit clients. And members of the Accountants Library should be interested in this portion, because it says, I'll go to the next slide, the details are given. Suppose you have a client of yours for whom you audit, and then you do tax return preparation for the client also. There is no threat, actually. There is no threat at all if you prepare returns for your client, because you have audited the accounts, the figures are final, and then you are just preparing the return. So it is a mechanical work that you're doing, and hence it doesn't pose any threat. Now, tax calculations for the purpose of preparing accounting entries, it creates a self-review threat. There is no doubt about it, because it creates a self-review threat. In other words, you are auditing the accounts and you are sort of helping the accountant in preparing accounting entries, so on and so forth. And you keep on calculating the tax that will be your outgo, that will be your outflow, which will be based on the accounting entries that you make. So that is a direct conflict of interest, and that creates a self-review threat, because you are maker as well as checker both. Now, tax planning, other tax advisory services might create self-review advocacy threat. Appropriate safeguards to be adopted. Appropriate safeguards to be adopted, as for example, using professionals who are not audit team members to perform the service. It means, say for instance, you have to advise your client on tax advisory services or tax planning or representative services, so on and so forth. So on and so if any tax advisory services or planning is required, then you should employ members of your team who are not connected with the audit of that client. They should be non-audit members of the team, not a team. You may have partners or you may have employees who are not engaged or connected with the audit of the client. In that case, obviously, you can engage them to do such tax planning or other tax advisory services. But it is always said that you as an auditor should not indulge in tax planning or other tax advisory services. Tax services involving valuations might perform only where the result of the valuation will not have a direct effect on the financial statements, obviously. And assistance in the resolution of tax disputes. Now, this is very important because this creates an advocacy threat. Now, it is obvious that suppose we do an audit for a client. And once we do the audit of our client, it may so happen that the auditee will engage us. Normally, auditee engages us in appearing before the government authorities or taxation authorities in scrutiny cases. Of course, now everything has become faceless, but in spite of that, you also have to do faceless assessments, faceless appeals, and now faceless tribunals are also coming into force. So if you assist the client in resolution of tax disputes, the institute says that it may create a self-review threat or an advocacy threat. So the solution to it is that if you engage partners of your firm who are not audit partners, who have not been engaged in doing the audit of the client, if you engage them, then you can avoid this advocacy threat or this self-review threat. This is what the institute has opined and suggested. But practically speaking, how much it will be effective one has to understand, because in spite of networking, in spite of merger, 74 to 75% of the CA firms are still proprietorship firms. They are not partnerships. So you have only one person actually. So how you can engage another person to do the representation work while you do the audit work is a matter of debate, which we all need to debate. And rightfully, the institute has deferred this provision till 1/4/2022 for more for a better thought process, maybe to evolve as far as this provision is concerned. So we have touched upon the three most important provisions which have been deferred: NOCLAR, taxation services to audit clients, fees relative size we have not touched upon, management responsibilities we have touched. Now let us come to the fees part, which is very important. This is a routine thing. What is a public interest entity? That is not very important. I'll go through only the, yes, this is fees relative size. This has also been deferred and also subjected to review actually, because the institute has said that we will keep it deferred also till 1st of April 2022, and it is also subject to review. What does it say? It says that you should not be dependent upon one client, and your fees should not exceed 15% of the total audit fees that you receive from one client. In other words, if you receive an audit fees of 10 lakhs in a year, your audit fees from one client should not increase 1,50,000 rupees. That is what the law says. That is what this provision says. But 15% is too low a rate, I think, because previously it was 40% in 2009. It has now been reduced to 15% and it is subject to review. But there are certain exceptions where the total fees of the firm is less than rupees 5 lakhs per annum. And in case of audit of government companies, public undertakings, nationalized banks, public financial institutions, or where appointments of auditors are made by the government, in those cases, so if your fees is less than 5 lakhs per annum and your appointment is from the government, from nationalized banks, so on and so forth from the government, then this clause is not applicable, because it could so happen that you only have such clients and say 70 or 80% of your total fees from a single client could be from that client. So it is not applicable to smaller firms, but for bigger firms having turnover of more than 5 lakhs, it is applicable but subject to review. So I think we have covered the important provisions of the volume 1 of Code of Ethics. The three deferments, fees relative size 15%, NOCLAR, and taxation services to audit clients. Management responsibilities of the audit client is valid and effective from 1st July 2020. And we have also discussed the independent standards and the 5 threats that a CA can face. Now we will directly go to volume 2. And this one is also an important slide. It says that the Code of Ethics in 2009 said that fees based on percentage of profits or contingent upon the findings, that was not allowed, because say for instance you have done some work and you are charging fees as a percentage of the gains. That was not permitted, except of course if you are a liquidator, you act as a liquidator, or if you say for instance are an auditor of a cooperative society where you charge fees as a percentage of the working capital of the cooperative society, so on and so forth. There, exceptions were there. But now, after the Insolvency and Bankruptcy Board of India has been constituted in the year 2016, members can charge fees because those have now been included in management consultancy services. What have been included? The valuation services means now you can become a registered valuer and also write the word registered valuer as a suffix to the right of your name after your name, and you can also write insolvency professional, that is IBBI, if you are an insolvency professional, that is also a permitted management consultancy service, and you can write that. You can write insolvency professional also as a suffix to your name. So these two things have come, and there the fees normally that is charged is a percentage of the gains or so on and so forth. And another new thing has come, that is fees for rendering non-assurance services to non-audit clients. If you render any non-assurance service, means not an audit service, to any client which is not your auditee, then also you can charge as a percentage of the gains or as a percentage of any amount, so on and so forth. Now let us come to straight away to volume 2, which deals with domestic provisions. And what are the here also five important changes have taken place over the 2009 code, which is over and above the 2019 code. Now, why these changes have taken place? These changes have taken place because there have been changes in the CA Amendment Act 2011. There have been amendment in the CA regulations 1988, changes in council guidelines, changes in auditing and accounting standards. You know, auditing standards till 2007-8 were known as auditing and assurance standards. Now they are known as engagement and quality control standards. Then Companies Act 2013 is a massive change that has taken place. So on, and many commercial and economic laws have come. So changes are bound to happen. And nothing is permanent but change, and hence these changes have been incorporated in the 2019 code. Then there have been changes in clause 6 and 7 of the first schedule relating to solicitation and advertisement, then changes in commentary under clause 8 pertaining to communicating with the previous auditor, so on and so forth. Now, this is not a routine matter. I will just go through the important ones, as I said. Yes. Now, there are certain prohibitions which are there, which a CA must remember. That is on visiting cards. There are you cannot, in the revised code of ethics, you cannot say that you are director in a company. As you know, that you can become a director simpliciter. What is the meaning of director simpliciter? Director simpliciter means you are holding a certificate of practice and you are a member. You are holding a certificate of practice. You are a member in practice. You are having your own firm. You can still become a director simpliciter, means you can become a non-executive director. You can become a director, but you cannot engage yourself in the day-to-day affairs of the company. In other words, you cannot sign checks, you cannot take policy decisions, so on and so forth. But you can, for the limited purpose of attending board meetings and obviously annual general meeting, and for the limited purpose of earning sitting fees against board meetings, you can become director simpliciter. And you cannot sign any ROC forms, you cannot sign AOC 4, you cannot sign MGT 7, so on and so forth. You cannot do that at all. And you cannot also take director's remuneration. So if you are a director simpliciter, you should not write that in your visiting card. If you are, every political party now has a CSL nowadays. There is a CSL for every political party. It has been found out of late. So as you should not become a member, I mean, you can become a member of a CSL, but you cannot write that in your visiting card, so on and so forth. So these are the two major things. You may be a member of any political party in the CSL, but you cannot write it because it will tantamount to advertisement in your visiting card. But you can write insolvency professional and registered valuer, which I discussed earlier, that you can write as a suffix to your name. Regulation 53B, MDP is not allowed till regulators of other professions also allow, and ICI issues modalities. Now, ICI already has issued modality. The Form 18 draft has already been published on the 8th of July 2021. And the FAQs and guidelines relating to multidisciplinary partnerships have not yet been published officially by the institute. And once they are published by the institute, then only this MDP will really take the shape of finality, because the Form 18 draft has been prepared, but the MDP as such, the concept has come, but it will be difficult for you to start doing MDP right from day one or from now onwards. It will take some more time, and the institute is preparing the FAQs and guidelines, and it will come out with such guidelines and FAQs very shortly. Now, there is another thing which requires attention of everyone. Is a member in practice cannot become a partner, designated partner, non-working and non-remuneration drawing in an LLP not carrying out professional work. Now, as you all know, many CA firms who have been partnership firms have become LLPs. They've become limited liability partnerships. Many, and there is a guideline also of the institute that how you can become an LLP, and many big firms have become LLPs also. But you cannot become a partner or a designated partner of a LLP which does not carry out any professional work. So in other words, you can X & company, chartered accountants is a partnership firm. You can be a partner in X & company LLP, chartered accountants. There is no bar, but you cannot become a partner, a designated partner or a normal partner in maybe non-working and non-remuneration, but you cannot be so in an LLP which is not carrying out any professional work. Now, this is very important. Guidance on tenders. This is very important, and I request all of you to kindly pay attention to these slides. Now, prior to 2006, what happened was the members in practice, prior to 2006, I'm talking about, not 2016, 2006, members were not permitted to respond to any tenders as such. And if any government organization used to float a tender, the chartered accountant had to write saying that since our code of ethics don't permit us to respond to tenders, we are unable to respond to your tender. Now, this was creating practical problems for the government also, because they said that, see, we also have certain codes. We also have a way of operating. Now, if I don't float a tender, then the CVC, the Chief Vigilance Commission or the Vigilance Commission will be after me. They will say, how did you select a chartered accountant? So you have to understand our problem also. So the institute realized that problem in 2006 and permitted chartered accountants to respond to tenders. And one more thing, what happened was in 2006 was undercutting was done away with, because prior to 2006, there was no undercutting. I mean, undercutting was not permitted. Say, for instance, if you give me work which is where I charge 3 lakh rupees. Now, if someone gets the work in the next year and he charges 2.5 lakh rupees instead of 3 lakh rupees, then he would be violating the provisions of the Code of Ethics. So this was the law at that point of time, prior to 2006. But what happened post 2006? Post 2006, undercutting was done away with. Now, suppose if a firm quotes, say, 10 lakh rupees, and if some other firm quotes 6 lakh rupees, then the firm quoting 6 lakh rupees was being awarded the contract. But what happened, the purpose for which this undercutting was done away with, the purpose for which the institute permitted its members to respond to tenders, that the very spirit was lost. The very spirit was lost because people started quoting very low fees, and there was tremendous competition. And since the government also realized that if we go for tender, if we don't go for fixed cost contracts, then people will, the firms will compete against each other and our rates will reduce, which will help us in executing the work. So the purpose was lost, and the institute felt that the purpose of doing away with undercutting, the purpose of doing away with the purpose of introducing responding, the purpose of permitting chartered accountants to respond to tenders, those are losing its significance and importance. And hence, the institute came out with this guidance on 7th of April 2016, which says that any member of the institute, if he responds to a tender, which can only be done exclusively by chartered accountant firms, which is mainly audit work, which is exclusively can be done by CAs only, audits done by CAs only, then minimum audit fees has to be mentioned in the tender document. Otherwise, the chartered accountant will not be permitted to respond to such tender. Now, but this was not made applicable for internal audit, because the institute or no one can kill the profession. Internal audit is a function which is not there only in section 148 of the Companies Act 2013. Internal audit function for non-corporates also can be permitted to be done by cost accountants, by other professionals, by engineers, by various other professionals, as I said. So while competing between chartered accountants with other professionals, if the institute says that without minimum audit fees, you cannot participate in a tender relating to internal audit fees, then that would tantamount to killing the profession, because the CA will not be able to respond, the CA will not be able to participate, but the other professionals will be able to participate. So that is why for internal audit, this guideline is not applicable for internal audits, because it is not a non-exclusive area of a chartered accountant. Here, one more issue I would like to add. There are certain FAQs which were issued on the 17th of June 2016. This notification is dated 7th of April 2016, and this notification, this FAQs on tenders has been issued on the 17th of June 2016. And what does one question of the FAQ says, which is very important? Say, for instance, if there is an advertisement for internal audit, and for some reason the government feels that chartered accountants are only competent enough to conduct this internal audit, they are competent enough to conduct this internal audit and no one else, then they only float that tender and tell only chartered accountants to respond. In spite of that, even if no minimum audit fees is mentioned, the particular chartered accountant firm will be permitted to respond to such tenders, because internal audit is a non-exclusive function of a chartered accountant. So even if the auditee has clearly spelled out in the tender document that only chartered accountants will be permitted to respond, since it is a job relating to internal audit, no minimum fees requirement is there, and it is not required to be mentioned in the tender document at all. And this has been categorically mentioned in question number 4 of the FAQs on tenders issued by the ICI on the 17th of June 2016. So this is a very important provision which one must remember. Then, as far as revised code is concerned, mentioning qualifications of accounting institutes which have MRA or MOU with ICI, that is only permitted. Means MRA means mutual recognition agreement, and MOU means memorandum of understanding. So if institute has any MRA or MOU with any other institute, then you are permitted to write such qualifications as a suffix to your name. Now, it says that a member or a firm is not permitted to sponsor an event, but But if a CP program is being held by a program organizing unit of ICI and it has the prior approval of CPE, prior approval of the Continuing Professional Education Committee, then you can sponsor. In other words, say for instance, if the accountants library conducts an annual conference, and in that annual conference there are chartered accountant firms or members who like to sponsor that event, partly, maybe not fully, maybe partly. If they want to contribute, they can do so. They can sponsor such an event. There is no restriction whatsoever. So any member of the accountants library also, or any firm, may sponsor the annual conference, say partly also, of the accountants library chartered accountant study circle, EIRC. And similarly, members sponsoring activities relating to CSR may mention their individual name with the prefix CA. Like suppose I do a CSR activity for the Lions Club. I can write CA Sumantra Guha has done such CSR activity, but I cannot use the CA logo, nor can I say that I am a partner of such and such firm. That I cannot say, because I cannot advertise my firm's name. I can advertise my own name. I can write that I have done it because I have legitimately done it. Advertisement on teaching coaching activities. Now you are permitted to do coaching activities and you can still have a full-time COP, but the teaching time is restricted to 25 hours per week. You cannot exceed 24 hours per week teaching activity, number one. Number two, the ICI has also issued an announcement dated 18th May 2017. If you go to the announcements of ICI and go through the archives, you will find this announcement dated 18th May 2017, which says that there is a bar on advertisement of coaching and teaching activities. So the bar is on the advertisement of coaching and teaching activities. It is not that you are barred to coach or teach. But advertisement, in sum and substance, the announcement says that you can only put up a board with your name and mention what are the subjects you can teach, so on and so forth. So there is a distinct bar. I would request members to go through this announcement, which speaks about this ban on advertisement of coaching or teaching activities, which is clearly spelled out on the 18th May 2017 circular. And it also says that educational videos may be uploaded by members. Suppose if anyone wants to teach anyone, say for instance, I'm just giving an example, then he can upload educational videos. However, no reference should be made of the CA firm wherein he may be a partner proprietor. He may write CA such and such name and he may upload educational videos also. There is no bar, because the institute has come out with certain bars on social media regulations, so on and so forth. But educational videos is not barred and can be uploaded by the members. Members of firm's name allowed. I'm going to the second point. 2000. See, these slides are comparing the 2009 slide with the 2019 revised code slide. Now, the new slide, the new revised code says that members' firm's name allowed in TV movie credits, provided not mentioned differently from other persons. Like say, for instance, if you have appeared on television after the budget, you are appearing on television, or after an important an important direct taxes amendment bill has come, you may be appearing on television. It should not be like, suppose if the other panelists are introduced, in a similar manner, you should be introduced, like say, for example, CA such and such. You should not be introduced like, you should tell the person who's comparing that it is not permitted by your code of ethics. You should not mention me as a very experienced chartered accountant or very important chartered accountant, or a chartered accountant having their firm having experience of 4 generations, so on and so forth. You cannot mention your name differently, but since you're not mentioning, it is better that you tell the person who is introducing you that there are certain restrictions and you just mention my name factually. There is no problem in factually mentioning your name. And sharing firm details in an interview, any detail to be given only on a specific question and of factual nature only. That means, in other words, if there is a specific question, if someone asks you are partner in which firm, you can say that I am a partner in such and such firm. But that you should stop there. You should not continue mentioning whether you are for how many years you are in practice, so on and so forth. You should not do any undue advertisement. Now, the new code says that articles and presentations included, like authoring a book. Suppose prior to 2019, firm name was not permitted while authoring a book, but now use of the prefix of CA or name of firm has been permitted, but those all have to be factual in nature only. So if you author a book, you can write the name of your firm in that book. And the new code also said that due to spread of social media, due to interpersonal socialization, due to interpersonal relationship between members, it may so happen that a firm may be celebrating its silver jubilee or golden jubilee or platinum jubilee or diamond jubilee or so on and so forth. So whether a CA firm is permitted to advertise about that occasion or that event in a newspaper or not. The code says that you are permitted to publish it in a newspaper, and where you are maybe having these interactions like silver, gold, and diamond, platinum, or centenary celebrations, because it could be so that there are many ex-articles of your firm who are partners in other firms or proprietors in other firms. They can come and also join that get together, so on and so forth. So this is absolutely permitted. This is a new addition which has been made in the 2019 code. As far as signboard is concerned, here the institute has left a lot on the conscience of the chartered accountant concerned. They have said that, look, you should be conscious enough about your responsibilities. You should not do something which smacks of any sort of cheap advertisement. Like, say for instance, if you have a signboard, you should not put up a glow sign. You should not have neon lights put all across the board so that it looks as if you are a shopkeeper. It shouldn't look like that. It should look as if it is decent. It has a certain taste, and the signboard belongs to a chartered accountant. It should not be glossy. It should not be too attractive. But obviously, it says that there should be appropriate visibility and illumination of the signboard. Say, for instance, if any client comes to your office at 7 o'clock in the evening and doesn't find your office, then that is also not correct. So there should be proper illumination of the signboard so that it can be visible, it can be identified. But at the same time, one must be careful to ensure that it doesn't tantamount to unnecessary advertisement. This is very important, which has been mentioned here. Now, the 2019 code also says that members may appear on television, films, and internet. Firm names may also be mentioned. However, any exaggerated claim or any kind of comparison is not permissible. So, firm name may be mentioned in films and internet, only factual, as I said. However, any exaggerated claim or any kind of comparison is not permissible. Like, I am a better chartered accountant than such and such person, so on and so forth, is not permissible. Network and logo, as I said, the networking guidelines have been revised from the 9th of February 2021. And you can go through the advertisement. You can go through the announcement in the ICI website, which speaks about revised networking guidelines. Now, this is very important, modes of communication. Now, I was in the disciplinary committee for 2 years in the institute, and most of the complaints that you normally used to come, complaints between chartered accountant versus chartered accountant, was due to non-communication. The incoming auditor used to get some work and never used to communicate with the retiring auditor, in which the retiring auditor used to get aggrieved and used to complain to the institute, and which is a violation of Part 1, Schedule 1, Clause 8 of the Code of Ethics. Now, what are the methods of communication? And the institute has given certain relaxations also as to which was not there in the 2009 code, but which is present in the 2019 code. It says, you read Part A, it says communication by a letter sent registered acknowledgement due. So you can write a letter to the retiring auditor saying registered acknowledgement due. You can also write a handwritten letter by hand against a written acknowledgement. Like you write a letter and the person puts a stamp and says no objection or whatever. He receives it and gives it back to you and says that I have received. That also tantamounts to acknowledgement. The third important thing, which is in bold, has been introduced from the 1st of May 2020 after the pandemic broke out and India went under lockdown from the 24th of March 2020. It says that acknowledgement of the communication from retiring auditors via email address registered with the institute or the last known official email address. Now, it says that, say for instance, you have received an appointment letter, you are the incoming auditor, you correspond with the outgoing auditor, you know, you have his email ID. You either have his email ID from the you know his email ID from the last year's audit report, maybe, or the client gives you the email ID of the client of the retiring auditor. And even if you don't find any email ID, even if the client fails to give you the email ID of the previous auditor, or it is not available in any previous audit report, then you can also write to the institute and the institute will be happy enough to provide you the email ID of the retiring auditor and you can communicate. Now, this was introduced from the 1st of May 2020 because at that point of time, it was difficult to actually physically go and send anyone to the post office or anyone, and hence this email conception. This email concept was introduced at that point of time, which got cemented, which was made which was made effective also through the revised Code of Ethics also from the 1st of July 2020. So from the 1st of May 2020 till 30th of June 2020, it was only a notification. From the 1st of July 2020, it became, it was made a part of the revised Code of Ethics. And the fourth point through UDIN portal has not yet been made effective. So there is no point discussing how to communicate through that. But certain issues, and one more thing is that no duty was cast on the, in change of auditorship, no duty was cast on the previous auditor. Now the duty is cast on the incoming auditor. If the incoming auditor feels that before accepting the appointment, he needs to write to the previous auditor knowing what were the reasons why the auditor was changed and so on and so forth, or if he wants to have any information about the client which he feels may subsequently damage his own reputation, then he may write to the outgoing auditor or to the retiring auditor, and the retiring auditor should reply to the incoming auditor about such information diligently. So this is what has been mentioned, and this is also very important. The say you are communicating with the retiring auditor and the premises are locked. So the till 2009 there was no provision which mentioned what will happen in such cases. Now the institute is saying that communication received back by the incoming auditor with office found locked, written on the acknowledgement due, shall be deemed as delivered. So if the premises are locked, what can you do? You will write a letter, it will come back to you, and it will be deemed to be delivered. So there is no issue. It will be deemed to be delivered, and there is no professional misconduct on the part of the incoming auditor if he takes up the assignment, if such a situation arises. Now, firm not found at the given registered address. The existing provision was silent. Now, firm could not be found at the given registered address. Now, the incoming auditor may inquire from the may inquire from the client
or what was the address of the previous auditor, and if not possible, it can also write to the institute to know what is the address registered with the institute. And even after writing to the address registered with the institute, it is not served. It is not served because the auditor is not available, so on and so forth. Then it will be deemed to have been properly served. So this is also very important. Suppose you communicate and you find that the postal remark comes that no such office exists at this address, then it will be deemed to be proper service. Of course, if the retiring auditor can prove that you never wrote a letter to him, that is a different issue, but he has to prove that. But if you genuinely write and then the office premises does not exist at that address, then it will be deemed to be proper communication. And communication in case of certification, it was healthy practice earlier, but it has been dispensed with now. But I would say that in certification also, although it has been done away with, but many frauds take place as communication is concerned. Because what happens, clients normally don't go to their original statutory auditors for any certificate if he has anything up in his mind. What he does is, he'll try to search any other auditor and say that his regular statutory auditor is ill, or he's not available, or he's out of station, so on and so forth. And he has to submit a particular certificate to the bank management, to the bank manager tomorrow only. And the bank manager is going to get transferred tomorrow evening only. So if you could kindly give the certificate, I would suggest that you should know who is his original statutory auditor, and then give a call to him if available, if possible, and trying to know why this client has come to him to get the certificate. Because many disciplinary cases have come to us where the auditors have certified certain things which shouldn't have been certified at the first place, and the auditor has been put to trouble, and it has tantamounted to professional misconduct. So although it has been dispensed with, maybe because this communication has to be done by the previous person who had given a certificate, so we really don't know when a certificate was actually given. That is why I think it has been dispensed with. But I would still say that if you find any walk-in client, you should always ask him why he is not going to his auditor, to his chartered accountant, who is normally his auditor, his statutory auditor. Now, the clause 9 of part 1 of first schedule is also important. I spoke of clause 8. Clause 9 is only meant for companies. Prior to the 2013 Act, there was section 224 and 225 of the Companies Act 1956, which has been replaced by section 139 and section 140 of the Companies Act 2013. And any violation of section 139 and 140 of the Companies Act 2013, which is nothing else but section 224 and 225 of the Companies Act 1956. Violation of clause 9 also is a major violation, where suppose you have to change the auditor, then at least 10% of the shareholders must express their intention in writing. There has to be an extraordinary general meeting, so on and so forth. Now, after the coming of ADT 1 and ADT 3, the incoming auditor must ensure that the company has filed ADT 1, and it must also see whether the ADT 3 that has been issued by the outgoing auditor is a genuine reason or not. Because nowadays what is happening is the ROCs are saying that in many cases they have discovered that ADT 3s have been issued out of coercion and things, so on and so forth, and no proper ADT 3 they are getting. And there is also a provision of penalty on the outgoing auditor if the ADT 3 that he is issuing is not proper and genuine. Definition of director simpliciter, I've already mentioned it while covering a director simpliciter. Now, HUF also, suppose if you are a member of an HUF or a karta or whatever, you cannot have any active role in the activities of the business. You cannot play any active role in the day-to-day functions of the business. You cannot do so. It is not permitted. You cannot do any attest function also of the HUF. It may so happen why you suddenly can become a karta of the HUF, because maybe some partition has taken place in the family, or due to death, the karta has suddenly died and you had to take up the reins of the HUF, and it is a family business, and hence and hence the karta, you become a karta of the HUF. You are forced to become a karta of the HUF. What you can do is, you can only take decisions of making investment of the funds of the HUF. That is the only thing that you can do. But you cannot, in any case, carry on the day-to-day activities of the HUF as such. So this is strictly prohibited. Confidentiality, as I said earlier, that you must keep your keep information confidential regarding your client. Of course, if the government wants any information from you, then you are, of course, you have to disclose that information of your client with the government. You have no other option left. Now, yes, look at the third point. This is important. Now, the second point, internal auditor cannot be tax auditor. I think all of us by this time know. And cooling off period after completion of tenure as director. So after you have completed your tenure as a director simpliciter, then after 2 years, for 2 years, you should not take up the assignment of that company as an auditor. And only after 2 years, you should take up the assignment as a statutory auditor after 2 years. Similarly, let me tell you that suppose if you are a concurrent auditor of a bank and you have been appointed to do the branch audit of a bank, you can immediately stop the concurrent audit assignment of the bank and can take up the statutory audit assignment if it is a bank branch audit. But very recently, the RBI on the 27th of April 2021 has issued a circular for central statutory auditor of banks, central statutory auditor of private sector banks, statutory auditors of urban cooperative banks or non-banking financial institutions, so on and so forth. It has issued certain guidelines where it says that if you are an internal auditor in those organizations, then there has to be a 1 year cooling off. Only after that 1 year cooling off, you can start doing the statutory audit, not before that. So for bank branch audit, there is no such restriction, but for central audits or audits of private sector banks, urban cooperative banks and NBFCs, there must be a cooling off of 1 year after your internal audit, and then only you can take up the assignment of statutory audit of those entities. Now, requirement of peer review is obviously there for audit of listed entities. And as you all know that from the 1st of July 2019, for all attestation functions, UDIN has been made mandatory. I would like to say a few things relating to UDIN also, because many members say that they have forgotten, genuinely forgotten to put UDIN. It is a fact of life. Many people, even after 2 years of UDIN being in force, at times, if you don't generate UDIN at that point of time, and if you defer it for 1 or 2 days, it may so happen that 15 days have elapsed and you have forgotten to generate the UDIN. And it is a very practical problem. It is not that you are avoiding to generate UDIN, it is you are genuinely forgetting to generate UDIN. In such cases, what you do is you have no other option, say 1 month has elapsed. So if you don't generate the UDIN at all, the document that you have signed becomes invalid as far as the client is concerned. And the client can come and later on say that, sir, since you didn't generate the UDIN, the document became ineffective and invalid. So what you should do is, say 1 month has elapsed, you on that day, when you discover that you have forgotten to generate the UDIN, you put that on that day, you put and calculate backwards 15 days, put a date which is the earliest, and write in the remarks column that inadvertently due to oversight, we have forgotten to generate the UDIN on time. Kindly condone the delay, and the institute will be happy to condone the delay. But don't make it a practice. This should not be a normal practice. It may happen once or twice, once in a blue moon, because one may always forget because it has not yet gelled into your system so far, even after 2 years of its introduction. Maybe after 1 or 2 more years, that will totally gel in the system. But at times people are also genuinely forgetting. There is no doubt about it. And in those cases, one should ask for condonation and mention it in the comments, in the remarks column. I think that will suffice. Now, advertisement guidelines, the changes that have been made, some changes in the website guidelines, guidelines on telephone directories, some online consultancy on third-party platforms, specialized directories, and advertisement through press release in certain circumstances. Certain changes have been made. I will go through the write-up, which is very important. Advertisement guidelines, when you give a write-up to your client, it should be honest and truthful. It says the write-up should be not of a nature that may bring the profession into disrepute. It must not be violative of the CA Act 1949 and the CA Regulations 1988 or Code of Ethics, and it should not have a font size exceeding 14, so on and so forth. So it should smack of some decency, and the membership number FRN is mandatory to be mentioned in the write-up, so on and so forth. So it should be decent enough, and the user of such write-up, the person to whom it is being written should feel that it has been written with a person who has got taste. That is the in sum and substance, that is what the institute wants you to do. So this is as far as the advertisement guidelines is concerned. Tax audit assignments, of course, we know that 44 ADA, AE, and 44 AF. There is no limit to as many audit reports you can sign. But as far as 44 AB is concerned, which deals with monetary limits, the limit has been increased from 45 to 60 by wide announcement dated 27th April 2014. The present ceiling is 60. But if you are a partnership firm and we have 3 partners, you are entitled to do 180 audits, tax audits, 44 AB cases, and any one firm also can, any one partner also can sign all the 180 audits, because he can also sign on behalf of other partners. So suppose someone can sign 53, someone can sign 47, someone can sign 80, whatever. The total should not exceed 60 multiplied by the number of partners for the firm as such. But any one partner can exceed his own limit, provided that he doesn't exceed the total ceiling limit of the firm as such. This is not very important. Yes, this is an important slide. Now, if you feel that you have been removed unjustifiedly, in an unjustified manner, it may so happen that you feel that you have been removed in an unjustified manner by the auditee. Then you can complain to the Ethical Standards Board, to the ESB. You can write to the ESB and mention in the ESB that you have been unjustifiedly removed, and with an NEFT, you have to send an NEFT of rupees 1,000 rupees to the Ethical Standards Board, and the Ethical Standards Board will take it up as an agenda in its meeting, and will also write to the auditee company, to the auditee, as well as to the incoming auditor. If his name is mentioned by you, because you perhaps know who could be the incoming auditor and to whom the work is going. So if you mention that, the Ethical Standards Board will write to the incoming auditor and the company, and if it finds that it is you have been removed in an unjustified manner, then it will take precautions and will warn the incoming auditor not to take up the assignment. But if the Ethical Standards Board feels that the removal has not been unjustified, it has been justified, or whatever, it has not been unjustified, then it will permit the company to carry on or execute or get the work executed by a new auditor or a new incoming auditor. And as I said, volume 3, it deals with all case laws. It deals with all case laws. They have been put under volume 3. It is also there in the Code of Ethics. Now, before I conclude, it is 5:39. Another 10 minutes time I will take because our time is till 6 o'clock. I'll take another 10 minutes time, and then last 10 minutes I'll keep for question answers. I will just give you a brief about the disciplinary mechanism and how it functions in the institute. Now, there are two types of organizations in the institute. One is called Board of Discipline and one is called Disciplinary Committee. Board of Discipline deals with Schedule 1 cases. Schedule 1 means the cases, I forgot maybe to tell you that the domestic provisions deals with two schedules, Schedule 1 and Schedule 2. Schedule 1 has got 19 clauses and Schedule 2 has 15 clauses. Schedule 1 basically are the non-serious offenses where a chartered accountant is complaining against another chartered accountant. And the most of the cases that are filed under Schedule 1 is violation of communication, Clause 8, Part 1, first schedule. Then non-compliance of Section 139 and 140 of the Companies Act 2013, that is Clause 9, Part 1, first schedule. Then something related to advertisement, which deals with Clause 6, Part 1, first schedule, so on and so forth. Or you are engaging in any other business or occupation which is not permitted, that also comes under this clause. That is Clause 1, Clause 11, Part 1 of the first schedule. And Clause 2 deals with, Schedule 2 deals with the more serious offenses where the regulator maybe is complaining against you. The regulator could be RBI, could be SEBI, could be NAFRA, could be any other regulator who is complaining against you. That could be a very serious offense, and those are normally covered under Schedule 2. And the most common clause which is in which complaints are lodged is Part 1, Schedule 2, Clause 7, which deals with gross negligence. So as I said, there are two bodies. One is Board of Discipline, which deals with Schedule 1 cases, complaints between CA to CA. And there are 3 members in the Board of Discipline. There has to be one government nominee, and there are 2 council members in the committee. Quorum is 2, and irrespective of the fact whether the government nominee is present or not, the council members present. If the government nominee is also absent, say for instance, then 2 members can decide upon the fate of us. They can decide upon the case, and if there is an equality of votes, suppose there is a tie, and someone is saying that he is not guilty, and someone else is saying he is guilty, then the chairman of that meeting does have a casting vote. But there is no need for the presence of the government nominee to form a quorum. But as far as, and the punishment that is normally awarded as far as Schedule 1 is concerned is either it's a reprimand or it is removal of name for a period of a maximum of 3 months, or it is a fine which is a maximum of rupees 1 lakh. Now you can be given punishments either in combination of the first 2 or the second, third, or all 3 together, or any one punishment, whatever the Board of Discipline decides. As far as the disciplinary committee is concerned, which deals with serious offenses, it comprises of 5 members of the disciplinary committee, and the institute can constitute benches, separate benches also for that, because now the institute has made it very clear that suppose if the respondent is from, say, from X region, no council member from X region will be able to hear that case. It will be from a different region. So on. So benches have been formed. Different benches have been formed, and there the quorum is 3, and there are 2 council members. There are 3 council members, and it includes the president also amongst the members, amongst the 5 members, and there are 2 government nominees. So it comprises of 2 government nominees and 3 council members, and the quorum is minimum 1 government nominee. The quorum is 2, sorry, but at least the presence of 1 government nominee is compulsory for deciding those cases, so that the government is fully aware what is happening as far as the Schedule 2 offences are concerned. And the punishments that normally are awarded is a reprimand or a removal of name for any period which can go up to life, and or a penalty, a monetary penalty, which can go up to 5 lakh rupees. It could be either or it could be a combination of 1 or 2, 2 or 3, 3 and 1, so on and so forth, as it is in the case of Code of Discipline. And lastly, before I conclude, another important thing I would like to say. Many people are not aware about Schedule 1, Part 1, Clause 2, that is sharing fees with a non-member, Part 1, Schedule 1, Clause 2. Now, say for instance, since 75% of our firms are proprietorship firms, it may so happen that the spouse of the deceased chartered accountant is not a CA, and he suddenly expires. Then, although you can apply to the CABF, that is Chartered Accountants Benevolent Fund, the spouse can apply. And as a dutiful chartered accountant, if you come to know of any information about a spouse of a chartered accountant, we should inform her, the spouse, accordingly about the existence of CABF. But it may so happen also that another practicing chartered accountant may purchase the goodwill of that firm. May purchase the goodwill of the firm, and the goodwill agreement will be drafted and signed by both the spouse of the deceased as well as by the person CA who is intending to buy the firm, and it will be placed before the institute, and the institute will vet it, and accordingly it will happen under the aegis of the Institute of Chartered Accountants of India only. And the goodwill that will be paid by the incoming auditor could be in installments or could be one time, depending upon the agreement. But then what happens, the old firm name will remain. That is the most important thing. The old firm name will remain because the seniority will also remain because of the old FRN, and the new member can start his own practice in that new firm name after paying goodwill to the deceased of the after paying the goodwill to the spouse of the deceased. And this law came way back in 30th of August 1998, but many of us are still not aware that this has been made applicable from the 30th of August 1998. Similarly, if there is a partnership firm and any one partner has expired, then if there is an agreement in the partnership deed, specific agreement, specific clause, that the widow of the deceased partner will be sharing profits with the firm for a limited period, for a specified period, then that also can be done. That also many people are not aware. So if there is a partnership firm, and if you want to have a clause to that effect, that the widow of the deceased partner will share the profits for a specified period. So the only issue is that for that proprietorship firm, also and partnership firm, the institute will keep the name of the firm freezed for a period of 1 year from the, in fact, it freezes it for more than 1 year. It does not allot that firm name. This is in the earlier case, in the case of the proprietorship. It does not it does not normally, they do not, the institute does not, they do not do away with the firm name. The firm name is kept freeze so that the firm name can be adopted by a person who plays the and tries to carry on the firm. So this is, I thought I would cover. Now I will stop share the screen and and accordingly we may take questions if they are ready. And I thank you all for giving me a patient hearing. I think we have, yes, I've got the gallery view. Now let me see if there is anything in the chat. Is there anything in the chat box? There is no question in the chat box so far. But anyway, if there are any questions directly, because we still have 10 minutes time at our disposal. So what one can do is one can unmute oneself and ask any kind of questions if one has, because we still have around 5-10 minutes. Isn't it, Tony? Is it fine?
Thank you.
Yes.
Anil, I have few questions to Sumantra.
Yes, please.
Somebody, I think it is traveling. This one sound is coming. I think somebody is traveling.
So what you can do is, what Smita
Anil, I have some few questions for Sumantra.
Definitely. No, somebody is traveling.
No. Let Smita mute everyone, and then Induda will unmute himself. Like that. So that now you can unmute.
Sumantra,
Yes, Induda.
there are 2-3 points which I want clarification.
Yeah.
Number one is regarding quotations.
Yes.
Few years back, I found some quotations were floated by Reserve Bank of India for executing certain professional work. And in that particular quotations and in that awarding those things, we found that, you see, some people went far below the.
No, but was it for concurrent audit work or any statutory audit?
It was actually a type of an audit. Say audit of certain stocks or certain things or certain debtors or creditors.
No, I will tell you, if it is stocks, or I think you're talking about the concurrent audit that takes place in RBI. Because later on, what happened was RBI also then later on their own mentioned minimum audit fees subsequently in the tender you are talking about.
Yes.
But if it is an internal function, although only chartered accountants can do, but in spite of that, the institute has made it amply clear that in their FAQ number 4, that if it is an internal audit assignment, then in spite of the fact that only chartered accountants have been offered, they can still quote even if minimum audit fees is not mentioned. That the institute has mentioned. That is because, say for instance, we don't know if the offer goes to cost accountant firms or it goes to a company, if it goes to any other organization, because under section 148 of the Companies Act, many people can do internal audit. So that it does not kill the competition for the CA, that provision is there in the clause, is there in the statute, so that a CA can also participate, even if it is an internal audit work. Yes.
Thank you for your clarification. Another point is that you see chartered accountants, they have their own HUFs and they are the kartas, and they manage the business of the HUF as this. Would you like to throw some?
Actually, it is not permitted. They cannot exceed. See, I'll tell you something. If you are a karta of an HUF, if you become a karta of a HUF, you can only, the permitted activity is investment of funds of that HUF. That the institute has permitted. Now, unofficially, if anyone does not put his signature anywhere, does not do any attest function, but takes part in policy decisions, but unofficially, then no one can stop that person from doing so. But I can only speak from the institute side that officially it is not permitted, and hence you can only engage yourself in what do you call
investing in the funds.
Investment of funds, yes, and nothing more than that. The institute is very clear on that.
Thank you so much. Thank you. Anil.
Any other question?
Sumantra,
Yes.
I have one question.
Please.
You say this rotation of partner. You said there will be one review partner, one engagement partner, one key audit partner.
Yes, yes.
So what happens to a proprietorship firm?
That is a $1 million question. In fact, frankly speaking, these practices are actually prevalent in listed companies. But at the same time, you also know that in a listed entity, the Companies Act 2013 has said that if you have if an individual is appointed as a auditor, he can be there for 5 years. For companies which are under rotation. I'm not saying about companies which are not under rotation. They're perpetually you can remain auditor. Only after 5 years you have to revalidate your appointment, so on and so forth. But for companies which are compulsorily under rotation, individual it is 5 years. For a partnership firm, it is 10 years. Then you have to get yourself rotated. Now, Institute has laid out those parameters of key audit partner, engagement quality review partner, and what you call rightly said engagement partner. So it is from the partnership perspective, to be very honest. Now, if anyone is a proprietor and frankly, and he has a listed company as an audit, which he can, as per Companies Act 2013, then obviously he can write to the institute, or he can say that since I am the only person, I may be having CA employees, but I don't have partners, so that will obviously not be applicable to him because he cannot help. And you tell me, only in 75% of the firms, even
Yes,
now,
yes.
And there is I still remember our balance sheet used to be signed by one person from Mumbai called Akhil Master. I don't know where, you must, I think which company, I don't remember, but he was a proprietor. He used to sign a balance sheet because there was love and affection between the client and the auditor. So he was not changed. But now the limit is 5 years, and after 5 years we'll get rotated. But anyway, this will not be applicable for a proprietorship. It is as clear as that.
Okay, thank you. Any more questions from anybody?
Anyone can unmute oneself and ask any question.
Any questions?
Yes.
One more question.
Yes.
Can you hear me?
Yes, Gautam.
Yeah, relating to this limitation of 5 years, which you said for audit. This applies to only which companies? Only public limited companies?
I'll tell you. On the 15th of April 2021, I date that to Likhan in Gautam da. 15th of April 2021, the institute has come out with an announcement. If you see the archives, you will find that announcement. It says that for proprietorship firms or persons who are in individual practice, and those companies where rotation is compulsory under section 139, in those cases, the period is 5 years and not 10 years. Because there was some confusion. Actually, what happened was...
Yes, right. There was
because
a
the institute, in the institute's definition, firm includes proprietorship also. But the Companies Act says that the Companies Act, nowhere it mentions proprietorship, or it says individual. So, for clarification purpose, Institute has come out with that clarification on 15th of April 2021 that even if a chartered accountant is in practice individually, or he is a proprietor of a particular firm, in spite of that, and he is doing the audit of a rotation wala company, then his tenure is 5 years and not 10 years. This announcement
does it then not? Therefore, it tantamounts that it does not apply to partnership firms.
No. Partnership is 10 years. He only has to get his appointment ratified after this on the 6th AGM, because after 5 years he has to get his appointment ratified. But if it is a listed company, he cannot carry more than 10 years. That is also
only in case of companies where rotation is compulsory.
Yes. Then only there also he can carry up to 10 years. Partnership firm. He cannot carry for 11 years.
No. That is right.
Yeah, that's
okay.
Yes.
I have understood. Thank you for the clarification.
Yes. Any other question? Induda কিছু বলবেন নাকি বোধহয় না?
When you are a speaker, no confusion.
Induda, Let's just give a vote of thanks.
Yes.
Okay.
Thank you.
So there is no confusion. I'll just add.
Yes.
There is no confusion because everybody is afraid of asking questions against professional ethics. So that it may become an unethical part on their part. That is why there is no question.
See, what happens is, Gautamda, during the course of your professional activity, to remember everything and to keep a tab on each and every activity at times becomes difficult. So at times, like I told about forgetting of generating UDIN, it has happened to people right, left, and center. Many people call us up also to know. I said that is the only solution, because otherwise you don't have any solution. You have genuinely forgotten, but you should not avoid generating the UDIN at all. That is not correct, because if you
is okay, but then
suppose if you have forgotten and you remember that you have forgotten and you still remember to forget, that you should not do. That is because otherwise the document will become invalid. So that is what I am trying to say. So আমাদের দৈনন্দিন জীবনে ভুল একটু হতেই পারে কিছু, we should try to adhere to it to the maximum possible extent, so that there is so that we are not surprised at a subsequent point of time. That is what.
okay, thank you.
Very, very true.
Thank you.
It gives me immense pleasure to extend a hearty vote of thanks to our dear friend CA Sumantra Guha for analyzing the code of ethics in such a beautiful manner that most of the things which we are not aware of, we have come to know this evening. Thank you so much. I would also thank our president, CA Manish, who has been with us during this webinar, and the other participants who are there to make the webinar very lively and interesting. Thank you so much. Good night.
Thank you. Thank you. Thank you.
Good night, everyone.
Thank you.
Good night.
Good night. Good night. So we can leave the meeting.
Yeah.
Thank you.